Before we get to Jermal, I want to plug one of the cooler features Schaefer's has rolled out in recent memory, Playbook of the Week. If you ever wanted to interact with a trader, this is right up your alley. Delivered every Monday, Playbook of the Week is an exclusive 30 to 45 minute live panel featuring a trading expert's take on the current market in hot sectors, a primer how to use Schaefer's proprietary trading analysis, a deep dive into a stock at the top of our watch list, and a complete Q&A session. Full disclosure, I listen to this every morning, not just in the interest of making money, but just to get a feel for the week ahead. It's a great way to plan out your next 5 days. I'm a big planner, big mapper outer, if you will, and if you're like me, this session is perfect for you. The Q&A also means you get a second opinion on any positions you might have. There are 3 ways to get the Vimeo link. First, dial 1-800-448-2080, or hit the link in the episode's bio, or visit schaefersresearch.com for more information. Once again, that number is 1-800-448-2080. And now, without further ado, here's Jermal. Ladies and gentlemen, welcome back to Schaefer's Market Mashup. It's your host here, Patrick Martin, on Wednesday, May 11th. I'm back in the swing of things now, doing pods once a week, and I'm thrilled to be catching up now with tastytrade's Jermal Chandler, friend of the program. Jermal, how are we?
Doing well, Patrick. Good to talk to you again, man. It's been a while.
Yeah, it has been a while. I think it was last summer. We'll have to hit the archives and double check that. But what have you been up to?
Oh, me, on the personal front, I got my oldest child who's graduating high school. So that's kind of fun. A lot of stuff happening there, prom's kicking in and graduation will be here soon, and got family coming into town for that. So lots on the horizon there. My youngest child, I'm actually my 9-year-old boy. I'm helping coach his baseball team. So in between there, and trying to spend time with my daughter from time to time and do things with her and spend time with my wife. So, I'm busy. I'm busy, but a good busy.
I highly suggest anyone listening to give Jermal a follow on Twitter, because he's got that perfect blend of, he's going to give you actionable advice. It's going to have stock market stuff, but he also gives you a good glimpse into his personal life. You see Jermal at Bulls games, jazz shows. His son, by the way, his 9-year-old son, an art prodigy, probably going to be designing monsters for the next Star Wars reboot, if we're being honest.
Hey, listen, dude, I don't know. We're so confused as to where he gets this talent from. It's kind of crazy, but he's really good artist. And, we always try to encourage it. He makes some cool stuff.
Oh, I mean, it's incredible. I studied that picture in detail and was just sitting there like, whoa. Like, he's got the whole little intricate details of each character down. It was impressive.
Dude, it was so funny. I asked him, and not to be like this clown type of dad, but I was like, did you trace this, or did you? And he was like, no, I just looked at the video and then copied. I was like, I was just curious. Like, I can't believe it. It's incredible.
Mm-hmm. As someone with -0 artistic talent, to see something like that at that young age, it always just blows my mind.
Oh, me too. I'm in that same boat of -0 artistic talent as well with you. So.
All right, well, I guess we got to talk about the the carnage outside. But first, I want to at least dive in with some talk about options volume. Last week, I had some SIBO guests on, and we were talking about weekly options volume. Options volume is healthy now. I think I saw a preliminary volume of 39.7 million yesterday, which was 3% above the recent average. Calls led puts by a decent amount. So it's healthy now, but for how long?
Yeah, and I'm sure exactly what you're referring to is probably the option alert. I know that's my buddy Henry there, who usually puts those out, and he usually has his finger on the pulse. And the truth is option volume is healthy on certain days. I think today, if I had to guess, would be probably one of those days. Yesterday, maybe. We've seen it mostly to the downside, because that's mostly what we've seen, right? Mm-hmm. And honestly, we could keep it at option volume, but the truth is it's a volume thing in general. And the interesting point about this is that the Fed put out a report yesterday talking about the lack of liquidity in certain markets. And again, they're talking about all markets. So whether it's commodities or whether it's futures or whether it's options, there's been somewhat of a lack of liquidity. And if I'm being honest, day to day, I've kind of noticed some of that as well because of just the way that we've been trading. And the truth is we're in a bear market. It seems like to me, people can argue, oh, well, we've had 11-year long run and we're still kind of, this is just a blip in that. I mean, honestly, this is bear market activity of what we're seeing more recently. And there's really a lack of conviction to the upside. And so when you have that, you're going to have lower volume time periods as everybody sort of waits it out for what they feel might be an appropriate time to, kind of take the other side, particularly contrarians. So yeah, I have kind of noticed that volume has kind of been waning, but again, it's the market environment that's creating that. It's also a situation of the Fed removing tons of liquidity from the system that's sort of perpetuating it as well.
Mm-hmm. Do you see an inflection point in the next 6 months where that volume really starts to drop off, or do people maybe think, okay, enough is on sale right now, let me go bargain hunting? What's the next 6 months look like there?
So I honestly think that right now we're at an inflection point. So the question, I guess, becomes how many inflection points do we end up having? But I think right now we're certainly at an inflection point, given the levels we are in a lot of different markets. And one of the interesting things to me was on Monday, when you had a situation, for the last several months, we have obviously tech has been sinking, cryptocurrencies, namely Bitcoin, has a serious correlation to the equities market, particularly the tech. So, they've been going in kind of the same direction to some degree. Oil has been obviously all over the place because largely due to the conflict in Europe. And so there's just been a lot of different, moving parts. One day you'll have oil up 5%. One day you have markets down 3%, vice versa. But the interesting thing to me on Monday was when at some point in time, after about the middle of the day, the trading day, equity markets were down, gold was down, oil was down, and cryptos were down. And that to me is one of those situations where you start to see the correlation being one when everything is kind of moving in one direction. There's really not any one situation of those different asset classes that are up. That to me starts to signal a situation where there might be somewhat of capitulation. Now, a lot of times you might need some volume, heavy volume to go along with that. But there was strong volume on Monday. So that's one of the things that I've been noticing the last couple of days. And honestly, I'm trying to figure out what happens next, what's going to happen from here. But make no mistake, we're in a precarious time.
Mm-hmm, for sure. So what is your advice to retail traders? I saw Bank of America put out those stats that like the mainstream outlets really picked up, that saying if you started trading during the pandemic, during March, April of 2020, if you started trading, you're in the red right now. Retail traders outperformed the S&P 500 from May 2020 to May 2020 to May 2021. Since then, that is just completely cratered and flatlined through March 2022, even with the S&P a little bit higher. So what's your advice to these retail traders that are now basically holding L's for the first time in their young trading career?
Yeah, I saw some of those stories too. And I got to say, I mean, some of them are a little sensationalized. The fact that it's just putting it all on retail traders, because there's firms out there called Tiger Global that are really struggling as well. And there's plenty of hedge funds that are also struggling. So it's not just retail traders, it's everybody in this market, as evidenced by the type of moves that you've seen more recently. I mean, Coin, for example, what's happening today after their earnings, Letter U, Unity Software. When you see names like that, Teladoc, of course, a lot of those names that have been within the ARC ETF. These are all not only retail held, but also institutionally held. And you can see people are leaving for the exits more recently. And so it's everybody, it's everybody that's been struggling in these situations. So to your question, what I would say to a lot of retail traders, one of the things that we do at Tasty often has always been to sort of try and somewhat, I would say, plan for these type of situations. And by that, I mean, a lot of our mechanics and guidelines are based off of where the current volatility levels are in the market, and that namely in the VIX. So in these situations, you're never supposed to be 100% totally in with all of your capital because you just don't know what's going to happen. And it's an unpredictable market, even when we are, on highs. So I guess the biggest thing is to, if there's a situation where somebody didn't understand these mechanics and didn't have that going for them already, and they're in a situation where they're at a loss, the unfortunate part about this market is that a lot of times losses lead to learning. Hopefully their losses weren't too catastrophic. And this is a good time to learn about how to develop mechanics so that you don't put yourself in these situations, because the market can be unpredictable, unfortunately.
Mm-hmm. Market Watch put out an article that said during the bulk of that period that I had previously described, retail option traders lost 1.1 billion on their trades, and they were explaining how they were losing them. Where many traders who bought in the money call options, they didn't exercise them prior to the ex-dividend dates. They didn't really know about the bid-ask spreads and everything, and that's one thing Tasty is I think so adept at doing.
Absolutely. And I always go back to my own career, and I was lucky enough to go to work at a proprietary trading firm and learn option trading and learn about these mistakes that people have, and you learn to develop a healthy fear for these type of things. And for those who aren't, let's just say with Tasty or learning, from Schaefer's, they really have to find ways to learn the correct way to trade options, because it's not easy. I mean, it really is not. And you have to learn about the multitude of scenarios that could come up, like you say, when you have a situation where you have to exercise calls or for some reason you get assigned on something. These things are very confusing for people. So that's why we always try to do our best to sort of I wouldn't say not lecture, but sort of try to teach people in an interesting and healthy and sometimes fun way, because that's the best way you can end up learning and avoid these type of mistakes.
Mm-hmm. Yeah, one thing that you guys do, again, if you follow them on their socials, it's like 1-2 minute videos. Your most recent one, you were talking about the bear market trading action, where the SPY rose after the latest rate hike and then sold off at a terrible day after, first indication of a bear market. So in a 1 minute snapshot, how should an options trader proceed when there are these days like that?
When there's these bear market days?
Yes.
Yeah, I mean, it's a situation where I think a lot of times people want to look for, once you learn how to trade options to some degree, you start to realize you can make money in any market. And as a result, you try to do that. And so when you have a bear market situation, like, oh, this market is going down, now I'm going to just go out and buy puts. Mind you, in a bear market, there's so much likely skew to the downside that option premium, particularly on downside puts, are a lot more expensive. So you really need quite a move to monetize those puts. Now, that certainly is possible to happen, but bear market activity dictates that you may be, the exact trading that we're seeing today, you may be down 1% at one point in time. It's a perfect example. This morning on the CPI number that we got, we were up 1% prior to the number. As soon as the number came out, we were literally down 1%. So we had like about a 2.5% range move in the market, and that is bear market trading. So it's really difficult to try and monetize long options in those type of situations. It's possible, but it's really difficult. It's one of the reasons why we're always looking to relatively far out of the money options to sort of monetize those and sort of wait on premium to come in. And again, doing it most likely risk defined so that you have an opportunity to sort of protect yourself from adverse moves. But this is a very tricky market. And this is one of the reasons why we talk about having maintained certain cash levels, just because you just don't know what's going to happen.
Mm-hmm. What I equate the options trading education to is learning any type of sport, where if you have some degree of athleticism or hand-eye coordination, you're going to start off good. Baseball, basketball, soccer, but to really take that next step and separate yourself, you need to focus on the intricacies, the details, the specific movements. And it's the same as options trading. Where like, yeah, you can do all this in the money stuff, but in a bear market like this, it ain't going to go anywhere. To really, separate yourself, you have to know the nitty gritty.
Yeah, you really kind of got to understand the market internals to somewhat degree, like you're talking about. You understand the idea of what liquidity looks like currently in the market, what a normal healthy market volume looks like, what this volatility currently means when you have a situation of VIX being 30, what does that mean? Or 32, for example. That's the part where you start getting into, okay, what does that mean with regard to distribution of pricing, and understanding that a VIX 32 means that that's pricing basically SPX moving 2% in either direction on any given day, which is pretty big swings. And so just when you start to understand those type of things, it kind of gives you an idea of how aggressive you want to be when you're trading. And this is a current time period where you really don't want to be aggressive with regard to some of your trading. Now, I know that sounds counterintuitive, because a lot of times when we have this type of drawdown in the market, I mean, when you're looking at NASDAQ down nearly 30% and the S&P 500 down over close to 20%, you're saying, oh, these are the times where the Warren Buffetts of the world say, everybody's scared, I want to buy and I want to be aggressive. And that's just with stocks, totally understandable, because the idea there is that, well, you're probably going to lose what you pay on that stock. So with regard to options, you don't necessarily want to be crazy aggressive in this type of market, because you just, it's a lot more daunting task when you're trading options. So you have to be a lot more careful.
Yep. Very well said. So, a broad question, I know, but where is their optimism right now? It's a bear market. Who knows for how long? We know interest rate hikes are, happening throughout the year. Where can someone look to for a light at the end of the tunnel? Somewhere, and there has to be something that will get a options trader or just any trader out of the bed in the morning.
Yeah, no, I hear you. And, again, for me, I think the optimism lies in what I mentioned a little while ago. It's not pretty, but like I said, the idea on a day where you see equities down, you see gold down, you see cryptos down, you see, well, I mentioned gold, but a couple of other commodities were down. The only thing that I noticed that was up on Monday was bond pricing. Even bond yields were down that day, which, again, that's been one of the drivers of some of this bear market, because bond yields have been rising because of the fact that the Fed is obviously continuing to raise rates, and they're looking at doing at least other 50-point rate hikes over the next couple of FOMC meetings. So that's obviously spooked stocks a lot. In particular, it's spooked tech stocks. And so on this past Monday, on May 9th, when you see a day like that where you have several different asset classes down, that says to me most people have kind of left the market. Now, that's going to create a situation right now where we probably might trade sideways even to a little bit down as the market tries to find its footing. But it's hard to call bottoms. I'm certainly not trying to do that, Patrick.
Oh, yeah. For sure.
But I feel like that might have been one of those days where it's like, okay, it's just out of gas. And now at some point or another, again, we got the CPI number today, which said that inflation is persisting, but it might be turning a corner. Those are the type of things that I think is really looking for. Because again, a lot of the impetus behind this market drawdown has been the rise in interest rates because of the fact that we have just such high inflation. It certainly didn't help that the conflict in Europe sort of kicked off, because then that creates a lot of other fears as well. And we've also had China with their lockdowns that have sort of created supply chain issues in the market and created, more angst. So there's definitely more than enough issues out there. But honestly, at this point, they're all known. The only real unknown, obviously, is what may happen with regard to Russia and Ukraine. But most of these issues are all known, and they all have some sort of, ability to be fixed. I think the biggest thing that the market does not like is uncertainty. And those are the things that create the huge volatility in the market. But I think it's fairly certain at this point, with regard to the interest rates, we're going to get multiple 50-point rate hikes. It's kind of what it is, because we just got money flooded into the system after the pandemic, and we created a situation where prices were just sort of raised. People were going after the same thing. Most people in most jobs, there were wage gains, and so you had this huge economic crisis that was fixed by flooding the system with money. And now we got to kind of reverse that, and that's understandable. But nobody said the market was going to like it. And the truth is the Fed's job going forward is to sort of push down the market, which they've done, believe it or not. That's part of their job in this situation, and eventually create a situation in the economy where there's no soft way to say it, that people are going to be unemployed. Unfortunately, that's kind of how it's going to go. So they're not saying that directly, but that's what the Fed is basically aiming for. And when they keep saying the situation of the current employment situation is unhealthy, that doesn't seem to make sense, because you're like, well, most people have a job. That seems pretty healthy to me. But clearly there's a certain level of the economy that the way that they look at it a lot differently than most of us do.
Mm-hmm. Every time I talk to you, dude, you have this calming effect on everything. Right across the board, just bring on Jermal, and he'll just say, like, listen, yep, okay, this is all bad, but, and not that you're an internal optimist, but you have a way of almost, cutting through the fog. And that's, I'll answer my own question from previously about, advice to retail traders in the red. This is investing. It is not all sunshine and rainbows, and, it's not you buy something and it just goes up and you hold it. There is so much more nuance to that you have to, like you said, you have to learn the hard way. You have to learn by taking a few L's.
You certainly do. And so it's funny you mentioned that, because one of the things